Okay, I do want to record it this morning because we're going to do some volume analysis on the higher time frames this morning. So it's one of the reasons I wanted to record it this morning. Unfortunately, Camtasia is not working, so I'll use the GoToMeeting option. Now, how many of you have studied volume analysis? Just type in a yes in the window. This morning, one of the things that we're going to do is look at volume analysis and look at the reasons that I incorporated the ADX in the ATR. Get some of these questions down. Now, the first thing I'm going to look at actually this morning is gold. And I did a video of gold today. And volume is a leading indicator. And I use it, I don't wait for congestion breakout on a higher time frame. I look at the volume and I go by the volume as to whether I'm going to go long or short, especially in a congestion area. Now, most of you know that gold has been in congestion since late of 2011. There wasn't any audio on that video, Pam? Oh, that's great. Okay. Well, I guess I'll put this up in place of it. You can see that really as of about November of 2011, gold was in a congestion area. And the amazing thing is if you put your lower level and your higher level on the chart, each time that it came to one of these levels, you got volume divergence. Okay. Now, a great way to trade that would actually be to take a long position when you get volume divergence at the bottom and take a short position when you have volume divergence at the top. Does everybody understand that? To me, it's almost simplistic at this point anyway. Now, what happens if you do not get volume divergence? That's exactly what happened here. There was a very, very slight volume divergence. You would really have to squint to see that volume divergence. But what happened was they went up and they tested for buyers. Now, anybody that's been trained in volume analysis by my group would automatically know that when you get divergence, they're going to test for buyers or they're going to test for sellers. This is an excellent example where there was minimal volume divergence there. They go up and test to see if any buyers are interested yet. There were none interested. So it comes back down and it tests the same level. And this was the key to it because that's where you got your strong volume divergence. Then it goes right back up and it tests the top of the area. What happens at the top of the area? Again, you get volume divergence. Then you come over here, and I was posting on this as it was approaching this area. And you can see that you had minimal volume divergence. If you squinted real hard, you could probably see it. That just said that they're going to test for buyers. The key to when they tested for buyers is that there was no buyers interested, okay? So this said they're going to come back down and they're going to test this area again. Now, as they were testing that area, what was happening? The volume was increasing, okay? Anytime you've got increasing volume, that typically tells you it's going to break an area. What happens when they break an area? They'll break through on very high volume, and then they will go back and test to make sure that they form resistance in that area, okay? And that's exactly what they're doing right now. I mean, I said 2 or 3 weeks ago that I expect them to come back and test 1506. Okay, when they do, that's when I want to be looking at the volume on gold for taking a longer term position. Does everybody understand that? Now, We have the same situation right now happening on the NASDAQ. And this is where I really utilize the higher time frames because these are the ones that give you the keys. Now, I'm sure everybody has heard all about the NASDAQ and the S&P and the Dow is making new highs. It's making new highs. It's making new highs, but this week it's actually making that high at the upper zone on a very, very strong divergence. Now, the issue here is Friday afternoon, because Friday afternoon is when we can actually read this volume bar. Right now it's building, so we cannot read it, okay? So what we need to do is wait until Friday afternoon and actually see if the volume comes in for that. If it does not, I would expect it to fall. Does everybody understand that? So instead of guessing, oh, it's at the high, it's going to go down now, it's going to go down now, I'm not trying to force it. I'm trying to let volume show me is now the time that it's going to go down. Does everybody understand that? All right, now let's go look at the euro. The euro was an interesting one on the higher time frames, because right as it got to the market top right here, what do you have? You have divergence. Now, this is why I like to use the ATR in the ADX. When you get this volume divergence right here, and you're looking at the highs and you get this volume divergence, where is price going to go? Yes, we know they're going to test for sellers, but where would we expect that test to occur? More than likely at the ATR. That's why I like the ATR so well. It actually gives me an area that price will come back to. The same thing with the slow moving average. This is an 80 period moving average, okay? But what you will see is that if it approaches the ATR and the slow moving average are coinciding together, then you're looking for volume divergence along the slow moving average in the ATR. We see a perfect example of that here on the Euro 720-minute chart. Again, as you see, it's throwing divergence along these areas. What does that tell you? That tells you that more than likely it's going to bounce to the upside. The ATR is absolutely amazing, and you'll see it time after time after time on multiple charts. And this is why I incorporate all of the indicators together, okay? Because, you know, to have volume divergence and to say, okay, we're going to have a test, or we're going to test for buyers, or we're going to test for sellers, okay? That's all well and good, but where is it going to make that test at? And normally, if you know how to read your multiple time frames, you know exactly where it's going to test at. In fact, last night I was talking to my partner Brian over at Fulcrum Traders, and he was naming off the support zones that he had on the euro, and just about every one of them coincided with either my ATRs or the slow moving average. And, you know, he's just using cumulative delta with the volume profile over on the side. But again, you know, this is where, because it's based on the average true range, it's based on highs and lows, you're always going to get an ATR really at a significant area in price, and that's what we expect it to bounce. Now, over on the Japanese yen, okay, and again, if you just look, as price is making these new highs, what is volume doing? Okay, It's really as simple as that. What is volume doing? Well, as it's coming up to the ATR, it's diverging. Okay? Now, if buyers are not interested in taking the market up and the market has been in a downtrend, what do you think the market will do? It's going to go back down. It's got to test for sellers. In this case, I would expect it to come closer to the ATR. Now, the ATR does have a time decay factor in it, okay? So, you know, instead of putting it at 0013, I offset that a little and say, okay, it should come down to around 0093. That's where your test is going to occur. Why do I offset the ATR? Because with each new bar, that ATR will get closer to price. That's why. Okay? If you're looking at the lows, you know, what happened as price is making new lows here? What happened? You had divergence. Where is it going to go? More than likely, it is going to go back to the ATR. To me, it's more of a visual thing, Christian. I don't have any numbers to give you. Now, does it have to be on the 1440? No. What do you see over on the 720? Do you not see exactly the same pattern here? You're making new highs, and as you're making new highs, you're getting divergence. Where is it going to go? The first area that it will go, excuse me, will be the ATR. Does everyone understand that? Let me get my charts back in alignment. Okay, most of you saw me writing about the Aussie. That I believe it was last week or on Monday I wrote about the Aussie. Everybody was anticipating the Aussie to go down. And on the weekly, on a long-term chart, I don't see the Aussie going down yet. I don't see the divergence there. But what happened over on the 720? The 720 gave us a great divergence right at the slow moving average. Okay? If you're looking at the Aussie as it is pulling back to the slow moving average, you can see that it's got a very, very strong divergence there. Okay? Now, some of you will say, oh, but it increased between this bar and this bar. Were the buyers rewarded? And that's what I look at. Did they get rewarded for the effort that they put into pushing price up? No, they were not rewarded. If they're not rewarded, are they going to continue to push price up and not have any type of reward for it? No, they're going to go back down. Okay. And I entered this anticipating it to test 0179. Why was 0179 special? Because it was the last major low. Now, I entered at the close of this bar, and then we got the wide bar. What happens on wide bars? They typically retrace. So am I going to sit here and wait for the retracement, or am I going to take profits? I'm going to take profits. It's that simple to me. Now we have formed a divergence here. So now I'm expecting what? I'm expecting a test for the buyers. Does everybody understand that? That is correct. That means that as people were trying to push price up, the market makers, as they're called, was actually selling them. Gwen, you had two areas that you could have measured the volume at. One is here. Okay, do you see this huge increase in volume? Where's the huge increase in price? Well, there are none. Okay. The second area that you could have tested was where it came back and tested the ATR over, I'm sorry, the slow moving average over here. And again, you've got a 50% increase in the volume, okay? But there's no reward. The market makers, what they do, Ryan, is when it's unsuspecting traders in the market like me and you, okay, as fast as we're buying, they're selling, okay? So that's why you get these big volume bars, but there's no movement in the bar. That's telling you that, you know, there's a lot of selling going on in that bar because the bar did not go up. You would anticipate the bar goes up as buyers enter the market. And when it fails to do that, it's just as good as a lower diverging volume. Do you understand that, Ryan? Do I at times enter a trade before the magenta peak? I do, yes. I don't recommend it for people that are new or that are not making money. You've got to understand, Arteman, I designed these indicators and I can actually read charts better than most people can. Okay. Yeah, I actually traded this over on the 720. I didn't even go down in time. But typically when I'm trading the Aussie, Gwen, I'm trading from a higher time frame because the Aussie is a slower market than what the Euro is. They do in some ways. They try to keep it down, Ryan, but it is very, very sneaky, I guess is the good way to put it. But the good thing is if you actually know how to read the volume, you can spot when they're doing it. A lot of times I don't concern myself with that, only because it puts me into a paranoid state of mind, which I don't like to be in. So I try not to look at that. Did we look at the Japanese yen? I think we did. Yeah, we did. Okay, over on the euro, you can see that we made, and this again is on a 720. You can pull this up on any higher time frame and see this market behavior, okay? You can see they made a low here, they came back, made a new low here, and another one here. Were sellers increasing? No. Where would you expect it to go? It would go back up, okay? Now, even in this little bitty bar here, you can see you had divergence. So they came in with sellers trying to test it. What happened when they tried to test it? This is actually blue. What happened when they tested for sellers here, guys? A lot of sellers came into the market. You had a 50% increase between this low and this low. You would think that they would take that low out. Did they? No. That meant that there was buying going on in that volume bar. Even though it closed down, it made both a high and a low, there was buying going on within that bar. Then you see that just as it reaches the ATR here, what happens again? Buyers are increasing. What does that tell you? It tells you they're probably going to flip the ATR, but they're going to bounce first. You had a bounce, and at this point, your volume is decreasing on the lows. That's typical trend behavior. Okay? That's what you would expect. On the lows, volume decreases, right? Because you don't want a lot of sellers in the market. What happens after that? it goes up. Now they're coming back and they're testing for sellers here. Now today was a rate announcement, which they were expecting them to cut the interest rate, which they did. During the up until the U.S. session opened, the market was moving up. Now it has taken a turn downwards. Well, Christian, it really comes down to studying the volume on a higher time frame, then going down in time and making sure that it's doing what you anticipated. The decrease in sellers here, Dan? Yeah, to me it was. You know, if you come down to this, okay, and you say, okay, there's no sellers in this market, I expect it to go up, then you look for a long entry. Now, you cannot read this bar until the close of the bar, okay? Do you understand that, Dan? It has to close first, but once it closes, yeah, it should go back up. We should get a bounce at the ATR, especially since it's a wide bar. Right now, it's coming back to the ATR on an increase in volume, Gwen. Okay, now we can still get a bounce at the ATR. It may be a very small bounce, but it would be a bounce. Does that answer your question? This actually told me when we touch the ATR for the first time, Dan, we're expecting a bounce. In this case, we're going to get a bounce to the downside, okay? A lack of sellers is telling me, okay, the bounce is probably over. That's all you're going to get, okay? So in this case, I would go down in time and look for an entry into a long position. Unless I'm trying to trade it, you know, long term, which I don't typically take an entry on 720 for long term. Yes, a solid bar on my chart closes down. A hollow bar closes up. Okay? All right. Does it just work on futures? Of course not. Okay? Most of you know I've been talking a couple of weeks. I've been in Duke for about 8 years. Duke Energy is who I pay my light bill to. So to me, it's sort of like, if I'm trading Duke and making money, then I'm kind of getting a refund on my light bill. It's really that simple. That's why I chose Duke. Um, so most of you know I was in Duke, and then I exited my position on Friday. The reason that I exited my position on Friday is look at all of the volume divergence that you're getting, okay? This is huge volume divergence, okay? You've got an ADX that is at 82. Now, on some stocks, it can go up to 90 and 95, okay? Duke is typically not one that goes that high. And I know because I've been trading it for so long, okay? So I went ahead and I actually closed my position at the close of Friday. Now, if this comes back and it touches this ATR on the Virgin volume, okay, I'm going to re-enter and make my light bill money again, okay? If it decides to go down because it's made a magenta peak on the monthly or something, then I would take a short position, okay? So I'm always trading in between ATRs and slow moving averages, but just about every trade I take has got some type of volume divergence. Does everybody understand that? Because to me, volume does lead price. It's just I need to know, okay, off of this volume divergence, where can I expect price to go? And that's the key, that the ADX and the ATR actually answers those questions for you. All right, I guess most of you know about IBM. They had a huge gap down because of their earnings. And again, what are you seeing as price comes back and test the slow moving average, diverging volume? What do you see as price goes up and makes new highs? Diverging volume. What is the difference between divergence here and divergence here? The ADX. Because what I'm looking for is this magenta peak that says, okay, now it's going to come back and now it's going to test the ATR. What happens after it tests the ATR? Again, diverging volume. What begins the retracement of the wide bar? Diverging volume. What started the retracement of the diverging volume over here? Diverging volume. Does everybody understand that? Hopefully. Okay, if you go and you look at Apple, okay, what happened right at the top of Apple? Did you get diverging volume? Yes. I knew that Apple was getting weak here, okay? This is when the weakness really started, okay? Then we're expecting it to pull back to the ATR. It does so on diverging volume. To me, that tells me it's going to go back and test this top. Again, as it goes back to test that top, is volume increasing or is volume decreasing? Volume is decreasing. When do you get your test for sellers? Magenta peak. The magenta peak said, okay, it's going to come back and it's going to test this ATR. It actually ended up making a magenta peak on the monthly. Okay. What happens then? Then you have a retracement here. We know this is a selling bar. There's no way they could have been buying that even though it made a high. We then get the confirmation that there's no buyers, that this is a healthy downtrend at this point. You have not one, but two buyers bar that's saying buyers are not interested in this. It's got to go lower. When you come over here and made this high, what happened? Diverging volume. Now, if you take and you look at this diverging volume on a higher time frame, it really kind of gives you a heads up on what the market's going to do. For example, you've just made diverging volume here. Do you think the next day is going to be an up day or a down day, guys? It's telling you that the next day will be what? You are at an ATR. It is diverging volume. The next day will be down. Does everybody understand that? What time frame are you looking at, Christian, and give me a stock? It's a weekly bar. What if it is a Monday? You cannot trade this until it closes, Stoker. Okay. Okay. Let's come back to this one. Let's see. Yes, on the workspace. Okay, this is where you got a magenta peak. Okay, so let me put all of these over to the side. And let's paste up a window here. And let me format this. Custom session stocks. Now let me format the window. Okay, I need more bars back. Okay, the high of that bar is 554.50. So you're probably going to get a magenta peak somewhere around in here. Okay. And the reason I have to do that, I have to be able to tell where that magenta peak come in. So this is the next day. You're starting to get the magenta peak. Okay. Now what you want to see is that when it approaches this ATR here, the volume has got to be decreasing. In this case, the volume was increasing. What did that tell you? What does increasing volume at the ATR tell you? It's going to break the ATR and it's going to go back down. Okay? Now, if it's going to go back down, and this is a perfect example of a Wyckoff spring, you've got a low here, and then it comes back and makes a low over here. What is a Wyckoff spring? A Wyckoff spring is when we have a low, price comes back and takes out the low, and then it closes above the line that made the low, correct? So now we know that it's going to go back up, okay? So it goes back up to the ATR. Is it doing it on increasing volume or decreasing volume? If you're looking at the buyer's volume, it is decreasing. That tells me they are going to test for sellers again. Do you see how these are increasing? Don't you dare take that trade right now. Do you see the volume divergence here on the buyer side? Are they ready to take this market up? No, they are not. This is the way you read your multiple time frames. This is the advantage of using multiple time frames, Christian. Okay? It is not confirming the trade. In other words, it's telling you that buyers are not interested in taking the price up. What is the path of least resistance? Down. Do you understand that, Christian? And I mean, back when Apple was falling, God, I wrote so much about Apple, it was pitiful. I was actually going through these trade setups on Apple, and everybody thought I was crazy because I said it was going to go down. And they were like, no way. Yeah, way. How do you define congestion? Well, um, the easiest way to me is when you see it making a high and a low and it stays within that range. I mean, typically when I see congestion, Artemin, I'll mark this high, I'll mark the low, and then I want to see what it does when it comes back to that high area. If I get diverging volume, then chances are it's going to go back and test the low of the area. Does that answer your question, Artemin? And most of the time I'm monitoring the weeklies, because weeklies you get a nice congestion zone. If you're trying to trade congestion zones on a 3-minute chart, get real, guys. You're not going to do it. Okay? It there's not enough peanuts there to make me trade a congestion zone on a 3-minute chart. I want to see congestion or consolidations on the weeklies, on the dailies, on the monthlies. Although I don't use the monthlies that much. I'm not in the trades that much. It's very, very hard for me to stay in a trade on a monthly chart. As most of you know, I'm doing credit spreads, and I've got a credit spread right now, and I'm itching to manage that trade. It's very hard for me not to do it. And the credit spread is still another, I think, 16 days. And I'm like, ah! Because I've got 16 days to do nothing, really. It's moving in my way. I don't know why I'm worried about it, but it's just the way it is. When you're a scalper, it's very hard to go longer term. It's one of the most challenging things I think I've ever done. Now, do you see how this one is? It's approaching that slow moving average. It's doing it on an increase in volume. Remember this morning I said that you've got divergence right at the ATR over on the 720-minute chart. Okay. What do you get right at the SMA over here on the 12-minute? Do you not get diverging volume? Yes, you do. Is that hard to trade over on a 3-minute chart? Yes, it is. But what actually happened on the 3-minute chart that would have made me go, ooh, that volume bar right there? Because they put a huge amount of effort into that price bar, trying to push it down. Were they rewarded? No. Well, what if you missed that one? Did you not get another opportunity over here? You know, I've had to actually set my clipper at the point of using an automatic risk, because a lot of these I'm getting in on a low, or my stop would be 2 ticks. Because I'm entering an uptrend on a down bar, I'm entering a downtrend on an up bar when I see the volume divergence coming in. Does everybody understand that? I'm all into lower risk. The lower the better. 12 minute. You just had a test for buyers. What was the result of the buyers? The result of the buyers was they're really not interested right now. So now I'm going to be looking at this bar to see if it takes out this low, and if it does, I want to see an increase in what? In sellers. If you go over to the 3 minute, you had diverging volume there. They came in with more effort. Were they rewarded? No, they were not. So they're going to come back and they're going to say, okay, are sellers still interested in this market? That is the path of least resistance. And what happens if sellers do not step in? And I'll tell you right now, most of you are going to miss it, but you better be watching that little bitty low right there. Why did I choose that low? Because that's the same level that price is at right now. And most of you would miss that. That is what makes volume analysis hard, is actually picking up on a price bar that is at the same level as the current price bar. Let me enlarge my screen. It's this one right here. And you probably can't see it because I got so many lines on my chart. The low of this bar is here, which is exactly where this low came back to. So you've got this bar with this bar over here. Yeah, on the live edge. You can't read this until it finishes, okay? But this is actually coming back to test a previous low. It's also called a double bottom. And you will be surprised at the double bottoms that make a difference. Oh, double bottoms are my favorite if you trade them right. Let's go have a look at the NASDAQ. You're getting a lot of divergence right here on the highs. Oh, that's 1440. Can't look at that one right now. That is way too far away from me. You've got divergence on the lows. Buyers are actually starting to step in right at the ATR, but you are at the ATR on the 180, so we could get a bounce down here. The next thing I would be looking at is, do we have divergence over on the 45-minute that would cause a test for sellers on the 45-minute? I'm not seeing any divergence right now on the 45-minute. All right, let's go down to the 12-minute chart, okay? We've got a high here. We made a high here, and we have a high here, okay? So do we have divergence between these highs? Yes, we do. Okay, so this tells me, okay, we need a test for sellers over on the 12-minute chart. Is this a great time to enter the market on a 3-minute? No, it is not. Now, grant you, this has got, another 8 minutes to finish. And this could actually exceed the previous one. Okay, because we have 8 minutes left in this bar. But as it stands right now, we have divergence. Is this the best entry point into a long position? Absolutely not. All right, let me go grab a cup of coffee and I'll be right back. Okay, I'm back. Let's go see what gold's doing this morning. On gold, we've had divergence over on the 3-minute. Pulled back to the ATR, diverging volume. Now, the one thing on this is it pulled back with diverging volume, but it didn't go back and test that top. Okay, now that is a warning sign that, hey, you might be in trouble if you were in that trade. But this is also why we tell you that 70 on the ADX is like a turning point. Okay, it's considered an overbought or oversold area. Okay, especially on these lower time frames. What would I be anticipating? I would actually anticipate this to come down. I would anticipate a stronger magenta peak coming in and it to retrace to the ATR or within, 5 ticks of the ATR. Would it continue up after that? There's plenty of buying volume there. Are you seeing any divergence? I'm not. Could we get a bounce down because we're at the ATR on the 180? Yes, we could. Do not read that volume divergence yet because this has until noon today to complete. Okay? And you want to make sure that you don't read these too early because that's 2 hours of volume that could still be put into that bar. That's very different than, okay, I've got 2 minutes left in a 180-minute volume bar. Okay? Over here on the euro, you're getting divergence right at the ATR. But no, you've had a test for for buyers here. Let me move this one. I'm not seeing any divergence over here and no divergence anywhere else. This one I would have to be watching the 3-minute to see if the buyers actually come in this market. If the buyers don't come in, it's going to go back down. It's always over 70, Artemin. If I'm entering before the magenta peak comes in, it's above 70 on the ADX, and there's diverging volume on that time frame. And I'm going to tell you, it is very hard to do. I'm going to have to put the clipper on to see what the risk would be. $89. Give me a minute here, guys. Yes, 8 ticks. You're at an ATR, Gwen, on the Virgin volume, on the buyer side. I would prefer that the stop on this would be up some, because if it comes back to test that ATR again, I'll be stopped out. That's what I would prefer. But did buyers step in? No, they did not step in. This is one for me to get the right stop on that one. It'd have to be about 10 to 12 ticks, because you're right at the ATR. The volume is saying it should go down, so I'll trust my volume. Buyers didn't respond, I'll tell you that. The sellers have got to step in right now. I will in a minute, Kristen. I want to watch this trade right now. He's coming back to test the same level again now. The level I'm looking at on the volume right now is here. You can see that there's divergence right now. Because of this divergence, I'd probably go ahead and tighten my stop where I'm not going to lose a lot of money on this trade. Come on, Bessie. I know it should come back to 30.64 because that's what the 12-minute is telling me. But I need the sellers to really step into this market to make that happen. And if you're looking where I'm wanting to see the test, is right here. It's 30.64. Christian, you were asking me which volume bars I was using for divergence. You came back to test this low over here, okay? As you came back to test that low, you had diverging volume, okay? With the diverging volume, you're expecting a test for the buyers. There's your test for the buyers, okay? Now this is a seller's bar, okay? It did make a high, but they did not get anywhere with that movement. You're right at the ATR on diverging volume, okay? Where is price more than likely to go? Down. Would I have liked the stop to be above the ATR? Absolutely. And the only reason I would want to stop above the ATR is because typically they will come back and test an ATR again if the divergence is not a strong divergence. You're still getting divergence at that one area on the 3-minute chart. At this point, I'm only risking 3 ticks on this trade. I wouldn't be too worried about it. And 3 ticks only because I enter with 3 contracts when I trade. Am I in this live? No, I am not. I don't trade when I'm in the live trading room because GoToMeeting would take priority. And I don't want anything taking priority when I'm in a trade live, except me. Does the wide bar on the 45-minute give me caution? No. And also, my wide bar, I've changed to ATR of 3 just because I was getting too many wide bars. I'll show it to you on the 45-minute because I'm trying to keep up with this trade. If you format the moving average trend, the ATR multiplier, set it to 3 because we've been getting a lot of small bars, and that causes a problem with the wide bar because we use 24-hour sessions. So come on, Bessie. Ta-dum, ba-dum. $30.73 would be your first profit target. One tick lower and I'll get a new volume bar. Come on, sellers. Volume bars are not on time. It's based on the highs and lows, Dan. That's the entire difference between my volume indicator and others. If this had gone one bar lower, you would get a new volume bar. Because it was an inside bar, you did not get one. Pat, yes, you're right. According to and let me line this up. From this volume bar to this, there was divergence, okay? But I've already moved my stop down to the point of I'm only risking one tick per contract. Am I going to get real nervous over one tick of risk? Absolutely not. Okay? What you're doing is you're forming a triple top here and a double bottom here. And a triple top should do what? It should push price down. Let's see if it does it. There you go. That's not off of volume. That's just off of price bar analysis. We now have a new low, and you are getting divergence. Your stop, you've already taken profit at 30.73, and your stop now is 30.87, okay? to change the ATR on the moving average trend, right click on your chart, left click format THD moving average trend, and right here where it says ATR multiplier, change it to 3. Now, the one thing that you are going to have to pay attention here, guys, okay? When it comes back to this low over here on the 12-minute chart, what is it going to do? Is it going to be increasing volume or is it going to be decreasing volume? Okay? In other words, you really need to see some sellers coming into this market, because if they don't, they're going to test for buyers again. And so far, every test for buyers has failed. On the 240 gig, they haven't seemed interested yet, so we'll see. Let's change this over to a 240. You do have a wide bar over on the 240, and typically that will retrace, but typically you will make divergence before it starts to retrace. And I'm not seeing any divergence on the seller side right now. All of the divergence actually has been coming in on the buyer side. So and I'm talking about on the 240. Well, 3050, that area has got a lot of support for it. Me and Brian were talking about that last night, Gig. It's terrible when you love the markets as much as I do. You see that you're getting divergence over here on these lows. Now we have a ADX value that is now magenta. Okay. Could you say, okay, I'm not going to risk this. I'm going to go ahead and pull my stop down. I don't know where that was. I guess it was here. Yeah, you could pull, God, if I could get the lines today. You could pull your stop right down to Clipper 1 and say, you know, I'm not going to give back my profits now. It's either going to go my way or I'm going to get out. And if you're looking over here at the 12-minute, do you see how you're getting that divergence? Now, grant you, you still have 5 minutes left in that bar, okay? But do I like divergence like this? No, because now I've got divergence potentially on a higher time frame. Not a good thing. Does everybody understand that? This is the point I say, okay, I'm not going to risk anything now. I'm either going to get my 1 to 2 or I'm going to get greater than 1 to 2. Because what do you have telling you, ooh, might not get Clipper 2 now? You've got divergence. right at the area that I said price will go back and test. That's the key to it. Thanks, Dan. When you really start reading volume, probably shouldn't say that in the room. I was going to say something, but I won't say that. I'll be nice today. Now, we've already moved our stop down, so this is like a no-brainer. Oh, y'all instigating me. Well, when you really, to me, is almost looking at the market in a logical fashion instead of all of the extra complex stuff that they put into volume. If you really just look at volume as volume is and trust it as a leading indicator, you'll see that it will make a difference in your trading. But let me tell you, I struggled with volume and all of the bullshit that goes with it for a lot of years. That is absolutely correct, Chris. That's the reason it's so important to look at these lows, okay, as price is coming back to test an area. You really need to look at it to see are buyers increasing, are sellers increasing, depending on whether you're at highs or lows. Well, it's something that I've really struggled with. You know, now say you would be out of that trade, and at this point I wouldn't care what else happened, okay? But what I want to go and show you now, let me take the clipper off, because some of you would have missed that one little bitty low that made a difference today. I know to pay attention to them, so well, flip. Let's select, oh. Okay, you had, do y'all see that low right here? And you think it doesn't make a difference because it doesn't have a dot on it. But the fact that it came right back to that area made a difference. Do y'all understand that? Because that's what told me they're going to test for buyers now. Now, if, and there we go. This is where they were testing for buyers, okay? If this one had been up at the ATR, I would have taken it even though the close was up. Okay, it just so happened that this was the one that was at the ATR, and I wanted as close to the ATR as I could get. Does everybody understand that? Dan, my entry would have been the close of this bar because that's the one that was closest to the ATR. We knew we had divergence here. All right, let's pop over and see what the NASDAQ is doing. There's no way I will mess with this right now. because you still got divergence on the highs here. I would be looking for an actual test of sellers here, which I don't see happening yet. And what are we doing on gold? Gold, you have no divergence over here on the 45 minutes. So I would not be taking a trade off of this ATR with no divergence over here on the 45 minute. To me, that's suicide. What about the Japanese yen? Okay, you had divergence here on the 12 minute. No divergence whatsoever over on the 45 minute. All you had was the retracement of a wide bar. So, and you're probably going to bounce up from this ATR. So I'm not seeing any divergence on the lows right now. There was one here that came back and tested for buyers. There was no interest by the buyers. You do need to see sellers stepping in. Now the 45 minute is telling you that it's going to come back and test 0165. This is almost identical trade to the euro that we just took. Yeah, this is just based off of U.S. traders because Japan wouldn't be open right now anyway. So this one, I would anticipate it coming back and testing the low at 0165, but you better get some sellers in there right now because there's just no sellers. Okay, does anybody have any other questions? Because if not, I'm going to close the session today. I've got to go back and re-record that gold video because evidently I didn't have my microphone on, which is typical for me. Do we have any other questions today, guys? Well, thank you, Bill. I will post this video later today as soon as I get it completed. Great, Pat. Well, thank you, Chris. The biggest reason is because your ADX is still bright red over on the 45 minute and sellers are increasing. So that really does give you an indication that it will test the low, Pam. Enjoy you, Mika. Well, thank you, Pat. Can I review the NASDAQ one more time? Sure. Let's go and look at the NASDAQ. The one thing that you need to be watching right now on the NASDAQ is that you are making divergence on the highs. That tells me they should come back and test for sellers, okay? Now, over on the 45 minute, you've got another just about 30 minutes, but as it stands right now, you're getting a major divergence over here as well. So until I see a test for sellers over here on the 12-minute minimum, I would not even think about entering yet, Gwen. Well, thank you, Pam. The NASDAQ on the 45 minute, there's no volume divergence. You can't read that with 30 minutes left in that bar. Right now, the volume is increasing on the highs. This is exactly what you would anticipate it to do. Yeah, you really do have to wait because more than likely the divergence is not going to stand until this bar is completed at 11:15. But I would be anticipating a test for sellers over here on the 12-minute chart. And if you go in while this divergence is building, you're going to lose money. It's that simple. Okay? All right. I hope everyone has a wonderful day, and I'll see you next week.